Here we go, guys. Just a real quick update video on oil, gold, and silver. We're looking at the weekly chart on oil right now. It's the micro futures West Texas Intermediate, and as you can see, we're putting in a high, lower high, lower high. So obviously, the trend is to the downside. And a little trick to figuring out the trend here. We love using these high pivots. Once you have two high pivots or low pivots, basically it's just a 180. Price moves up and just does a basically a V shape either at the top or at the bottom and reverses price. Okay, just a 180. And once you have two high pivots in a row, that becomes a valid and reliable trend. And as you see here on the third one, just a little tip, okay? High percentage of the time, high odds that the third hit of a trend line will do the same thing as the first or second one, okay? So that's, a lot of times we'll go short on that third hit there, okay? Or if the trend line's on the bottom, obviously you're going to bounce off that, not 100% of the time, but you can bounce off that trend line, okay? Then it'll be the fourth or fifth hit, again, depending on, high odds, high probability you'll break through it. So just kind of keep that in mind. And we talk about all this in the course that's linked below. But anyway, we're looking for potential, continued potential downside in oil here. But at the same time, again, your consolidation zones, low pivots, high pivots are going to determine potential support. So when oil comes back down here and everybody jumps in the shorted here, guess what? Around $71 to $70 because of this consolidation zone over here, we're expecting. Matter of fact, even into this zone here. See, we have two areas that could possibly, again, not 100%, but pretty good odds, probability that we'll get some consolidation again over in this area, should we pull back into this zone in order to take we'll look for an event that will cause us to go long oil, okay? So you can play both sides if you know where the support areas are, where the resistance areas are. You can play both charts and in other words, to the upside or to the downside, okay? Simple as that. And then real quick on gold, a lot of people asking about that. And let me go to the daily, kind of break this down. Well, first of all, I want to show you from back here, if you know where the location is on the chart. Location on a chart is as important as location as your realtor talks about regarding real estate, okay? Prime real estate, the best in town, best neighborhood, so on and so forth. That too is very important on the chart. A lot of people don't realize that. And the best locations are those in and around a major moving average. Here we have the 20 and the 200. And when they come together, narrow range, that's very important. That is considered a prime, a very high odds, very high probability location. And then also to add to that, sideways consolidation, okay, right here. Prime area, prime location, and then you simply sit on your hands and wait for the event. What's the event? As simple as it sounds, a big green bullish engulfing clearing, because we cleared everything over here to the left, takeout bar, okay? And then you can see what happened after that. Now these sideways consolidation zones, you just sit on your hands because they can break to the upside or downside, okay? And then also you want them in or around the 20 or the 200, okay? And we talk about that in the course. But anyway, as you can see, what we've done here is a measured move. So we started down here, moved up, pulled back to a low, and we're expecting the same leg here extension to be put here. So that takes us a little bit higher than where we are now on this move. And we talked about the trend lines earlier. Well, here, here's another one on gold. one, two touches, so it's a valid, reliable trend line. Hit it the third time. What did it do the third time? Came back down just like the first and second one, okay? Now the third or fourth is when we're expecting a breakout. That, nothing's a guarantee, nothing's 100%, but we already have it here. We already know our extended range, our potential target off this break to the upside, this event that happened, okay? Again, bullish engulfing, clearing, takeout candle in and around the 20. The location was absolutely perfect. So that was another add to on gold, okay? Let's go to silver real quick, make this fast. And as you can see up here, we put this in a while back, went short here. Why did we go short? Well, number one, we had a location on the chart, okay? Sideways consolidation zone, and technically inside bar. See that green bar here? Everything was closing inside of it. And this is really what drives a lot of inexperienced traders and investors crazy, is that, they don't know whether to go long, short, or what's going on. But if you think about it, there's only three ways price goes on the chart, or three ways price goes, any way you want to look at it. It's either going up, or it's going down, or it's going sideways, okay? And if you can figure that out, you make a little money in this business, okay? So sat on our hands, waited for the market, waited for the big money that controls all this to make their move, and boom, broke down to the downside. And once you get under the 20, you just hold in mode, okay? Now, this is a specific measured move here that our, people that, have taken the course know about. Has a high percentage of support if you're on top of it, or a high percentage of resistance if you're under it. And as you can see, we consolidated and broke out on it before. Again, location, knowing where on the chart to zero in. Okay, that's prime real estate. It's a narrow range in or around a specific moving average. Now we're going to sit back and wait for the event. We're going to wait for the igniting candle to either take us higher or to take us lower, okay? I was going to say simple as that, but it really kind of is. And then up here, as you can see, that red dash line, a lot of resistance. So we're going to be watching silver very, very carefully. If we can break over that resistance, that red dash line. Right now we're in a, kind of a negative location, a little bit more bearish than bullish, because the bullish area is really right here. That was where, obviously, where to get in. Right now we're coming into that resistance area, so we have our stop loss really tight in case we reverse here, do a 180, in other words, a pivot to the downside, okay? But if we break over it and then we're able to confirm, then we can add to our position. And that's what the pros do. They're always adding to their position and, scaling in other words, slowly putting more and more into the position as it goes up, or slowly scaling out, taking profits off the table as the markets are turning to the downside. But anyway, guys, if you want to learn how to do this for yourself, we currently have a 50% off sale going on the micro futures trading program course below. Check it out. And most importantly, thanks for watching, and we will see you on the charts.